Welcome back to the Michael Gaddis Show on AM 1170, The Answer. I am your host, Michael Gaddis of michaelgaddis.com. I am here today with Richard Shaw of Shaw Financial Services. And the website for Shaw Financial Services is shawfs.com. He's here today to talk to us a little bit about why you should be doing something instead of nothing. And what do you mean by that? For everyone that thinks that April is the important time for taxes, Richard's here to tell us how that's nonsense, how you should be doing something right now to prepare for your taxes for next year. Richard, thank you for coming on the show.
Thank you, Michael.
So, Richard, why is it so important that people contact their tax person right now to talk about taxes for next year?
Well, the most important reason is once the year is over, it's over. If you're looking to save taxes or do timing correctly, you meet your accountant at the tail end of November or December, and you'll be able to do something. Just ask your accountant for help. Let them know where you stand. And tax planning is going to save you a lot of money.
Well, I want to talk first about businesses. I know most people who are listening, might have some sort of business interest, either a direct business relationship or something. Why is it so important for business owners to discuss tax planning with their accountants right now? Well,
if they don't do tax planning, they could get into a lot of trouble. If there's several different types of entities. There's a C corporation, an S corporation, a Schedule C, a partnership. But if you don't take advantage of what's in those structures and do it right, you're going to pay tax. Example, if at the end of the year you don't take a certain amount of money as salary out of a C corporation, you're going to pay a lot of extra tax for nothing. On another hand, all your other types of entities, whether you took a salary or not, you're going to pay tax. So you better do something inside of the entity to save you tax or outside of the entity to save yourself tax.
Well, you hit on a good point that I don't think a lot of people know. You mentioned C corporation and S corporation. Can you tell us a little bit about the difference between a C corporation and an S corporation?
Well, the best way to look at it is an S corporation is taxed like a partnership. Whatever the profit is of the S corporation is going to be divided among the people who own it. In a C corporation, the tax is paid by the corporation. Now, let's assume you take out money from the corporation as a salary, and that's going to be taxable to you individually. If you didn't take the money out as a salary, you left it in the corporation's going to pay taxes on it. And then guess what? A year from now, 2 years from now, you say, well, I'm going to take that money out that I didn't take out before. It's going to get taxed again. So you could have actually paid 70% taxes on the money. Had you handled it right, you would have paid 40%.
So as a business owner, let's say it's December 1st and I'm sitting there not being concerned about taxes. And let's say you could go in and take a snapshot of what my situation is, assuming that it would be the same at the end of the year. You can basically take a look at what's going on now and say, hey, look, if you were to do X, Y, and Z, you might be able to save a considerable amount of taxes because right now you're on the hook for X amount of dollars. However, if you do this, this, and this, you're only going to have to pay Y. Is that kind of what you're saying?
Exactly. Remember, your accountant is not reading a crystal ball. When you come into your accountant after the year's over, whatever the numbers are, they are. He can't help you anymore. It's a done deal. But if you see him in December and he calculates what your taxable event could be, he should be able to give you not just one choice, but many choices of things you can do to save taxes, to provide certain forms of wealth protection and things like that. Go to see your accountant. Don't wait till next year.
We're talking to Richard Shaw of Shaw Financial Services, shawfs.com, and he was just pointing out the importance of business owners to contact their tax planner right now and not wait until after the end of the year. And I think you brought up a really good point. And I think that point is after December 31st, there's nothing you can do about it. It's stamped in concrete what has occurred. during your year. So if you come in ahead of time and you let someone like Richard take a look at your situation, Richard could say, look, right now you're facing a potential tax liability of X. But you know what? Here we can do these particular things to try to bring your liability down. What are some of the things that somebody can do, a business owner can do to bring their tax liability down? There's lots of things, but let's take a look at certain things depending on whether the taxpayer is a cash basis taxpayer or an accrual basis taxpayer. Well, if it's a cash basis taxpayer and they legally do not bill for certain services, that money's not going to come in. They're not going to have to pay taxes on it. Just the opposite. What if you prepay a year's rent, which you're allowed to pay up to 12 months of expenses? So if you have rent and it's $5,000 a month, at the end of a year, it'd be $60,000. If you paid the $60,000 on December 31st, it's a deduction for 2015, period. Well, I think that's really interesting because it makes me wonder how many of you listening today actually know how taxes work. And I mean, even as business owners, we get caught up in our everyday, events of what we have to do for our business. But the behind the scenes, the thing that matters a lot is our tax preparation. And it seems like just as you're going through and talking about cash, cash versus accrual basis, these types of things are things that business owners should be aware of. I mean, would you agree with that? Oh, absolutely. You need to know where you are. You need an accountant, and your accountant needs to always keep you on board as to where you are tax-wise. If you don't let him know where you are in November, December, how's he going to help you? I think that's right. What about charitable contributions? Can businesses make charitable contributions? Businesses can make charitable contributions, but here again, the tax planning accountant is going to say, you don't want to make a contribution from a C corporation. Why? Because the C corporation isn't permitted to deduct 100% of that contribution. You are. So if you wanted to decrease the corporation's income and you took a check to yourself for a salary and donated that amount, your benefit would be greatly enhanced. Well, I know you gave me some information before we went on the show here today, and one of the things you had mentioned was other business extenders. What are business extenders? Well, right now, business extenders are things like people are aware of the extra depreciation you can get using Section 179. That's a business extender. Right now, Congress has still not passed the business extenders. There are over 50 that they're looking to pass. The Senate has already passed it. The House has not. It is so important that you talk to your accountant as soon as you know if they've passed. Now, how do you know? Call your accountant. Say, by the way, do I have the use of extenders? Have I been using those extenders? And if he says yes, next question you have to ask is, has the extenders been extended? And do I need to come in to utilize those to the best of my ability? Well, I have to be honest, Richard. When I was in law school, I took a class in tax law. And when they gave me my book, I swear it was like a foot thick. It was huge, and it bored me to death. I mean, I'll be honest with you, I could not get my head around it. It was just too much. I did fairly well in the class, but it was definitely something that I found a little bit intimidating. And as I look here now at some of the notes that you gave me about, things like income acceleration and some of the other factors, for year-end tax planning techniques, it's just boggling my mind how many things and considerations that a business owner has to take into effect or take into account when they do their tax planning. I mean, it takes someone going to someone like a professional like yourself. I mean, for example, a lot of people try to say, well, I don't want to go to, this particular accountant, or I don't want to go that. I'd rather go to, to the strip mall and get my taxes done by, H&R Block or whoever it might be. What do you say to those people? I always say that the old expression, you get what you pay for. But what's interesting about that statement is that if you go to H&R Block or some of the other people that we all know exist, and you think you're going to pay less and get as good a job, the answer is no. But interesting enough, if you came to me or you go to your accountant, you're not going to pay him more than H&R Block.
it's going to be the same thing. And in fact, you may even pay your own accountant less. But forget the cost. Think of one thing. The real cost is the amount of taxes you're going to pay or not pay. That's the true cost.
Well, I think the key is when you do anything in life, and this is the way I kind of do things, when you do anything in life, you should seek an expert out that knows what they're doing. I mean, I know a lot of people like to take shortcuts, and, I was just talking to an elder care attorney earlier today, and he said a lot of people for estate planning are just going to a mill and, finding some place that says, I can do your estate plan for $250 or something like that. There's an old adage, and there's a reason why it's an adage. You get what you pay for, as you mentioned. And, I don't think that people really realize the benefit that someone like yourself can bring to their business if they just consult with you. And what do people need to do if they want to, like, let's say they want to consult with you? What do they need to do?
All they have to do is call us and make an appointment, come in and see us. We're not going to charge you for the first appointment. Don't take advantage of how much time you spend with us. And the money we save you is going to be well worth it. And whatever we charge you, you will never be sorry you paid us the money because of the amount of money you're going to save in taxes.
So you're going to give business owners a free opportunity to come in, pick your brain. You can show them what you can do. And then after that, there you go.
Exactly.
Wow. Well, when we get back, we're going to talk to Richard Shaw some more about your personal taxes. I know everyone thinks, tax planning for businesses is important, but it's just as important for homeowners and regular people to do their tax planning as well. So after the break, more with Richard Shaw. You're listening to Michael Gaddis Show on AM 1170, The Answer.